You've been going back and forth asking yourself, torturing yourself, asking the question, should you sell all of your SCHD because it had a little drop off? You've been torturing yourself for weeks now because the communities that you are attached to and all of the cannon fodder and the noise in the financial community is about SCHD. Should I sell? I was on one Reddit forum because I'm a part of a dividend, part of the dividend forum over on Reddit, which by the way, this is not an ad. Nobody's paying me to say this. I have to say that. But if you are interested in dividends, please do become a part of the community over there on Reddit. There are some really, really good people over there that are doing some really amazing things with dividends. And there's a lot of information over there. Now, there's a lot of misinformation too, so you got to be careful. Just fact check. That's all you got to do. Just fact check and you'll be fine. But I was on the Reddit forum and I was looking around and the topic of SCHD was posted in one of the forums. And this one particular person said in the comments, he said, I've been invested in SCHD for a year and I've barely seen any growth. Excuse me? A year? Ladies and gentlemen, if you have no tolerance, okay, and if you think that a year is enough time to actively gauge whether or not you should be invested in something that is long-term, that you are investing in long-term for dividends, get out of the stock market right now and go read some books. Get out of the stock market right now and go read some informational guides and books. Go watch some Warren Buffett seminars. Go to YouTube University, whatever it is that you got to do so that you get out of this ideal that everything is supposed to come like that. You know what I learned a long time ago? I learned a long time ago that the world over, especially here in America, has turned into a microwave society. Because we have everything at the literal tips of our fingers now with these phones, we have become the ultimate microwave society. Nobody wants to put in any work to do anything long-term anymore, not even in the stock market, and that is asinine. I do not understand it. That's asinine. We're going to get to the stock in a minute, I promise y'all. I just got to go on this little mini rant before we do so. Nobody wants to put in the time anymore to invest in the stock market to actually get returns. People are joining the stock market and they're jumping in thinking, if I make a $20 investment today, by Friday, I should be able to pull out $2,000. That's what people are thinking. And you guys have gotten this mentality from all of these fucking day traders, all of these people that's clipping up YouTube shorts and telling you that you can buy a course and join a day and make $50,000 by the end of the year. You guys have been so brainwashed to where you now think that a year in the stock market with a particular stock is a waste of your time if you have not seen gains of 500%. That's where we are. That's where we are, y'all. And if you think this way, I'm telling you right now, please sell all of your stocks and get the fuck out of the stock market and go read some books. Go read The Intelligent Investor. Go look up some YouTube videos, whatever it is that you got to do. Go read so that you can get all of the information that you actually need to make informed decisions and investments going forward in the future. And you're not up here on Reddit forums talking about, I've been in here a year and I ain't seen no movement. I'm going to sell all my shares.
No, you're not. Yeah, no, you're not. No, you're not. Stop.
The stock market is not for you. The stock market is not for you. You've been bamboozled by all these people that told you that you can come into the stock market, play around with some numbers, and then walk up out of here with $10,000 every other week. It's not happening. That is a fairy tale. That's not what actually goes on in the stock market. No day trader is going to tell you that because they want you to buy their course first. But all you got to do is ask yourself a simple question, really. Are the stocks that are in a growth fund like SCHD, a dividend fund, are the stocks there and the companies that are present there and that are represented there, do I see those companies going out of business in the next 20 years? That's all you got to ask yourself. You can also ask additional questions. Where do I see? What is my projection for those companies over the next 10 to 20 years? And if you don't want to do any of that, then the very least you can do is come to Google and use that phone that you got in your pocket that you sit around on for 9 hours out of the day and use it to actually get some information and do some fucking good for your finances. Ask Google. Ask Google. I'm serious. It sounds funny, but it's so simple. Ask Google. They'll tell you. I promise you. They'll actually give you some really good information. If you don't want to delve any deeper, if you just want to go surface level learning, ask your Googles. Do your Googles. Now, let's move on because a lot of people are questioning and they're asking, well, should I sell my shares of SCHD because they've seen a drop off in the last couple of months, in the last year or so? Should I sell? Not even the last year. I think year to date they might be down. But the question is, should I sell my shares of SCHD and go off into something like DGRO? Because the consensus is, and at least here in the finance community, the consensus is DGRO is way better. I don't know why that's the consensus. Maybe because DGRO has seen more growth and stock appreciation than SCHD. But otherwise, there's still a basket full of headaches over there that you got to worry about as well. Now, really quickly, I don't want this video to be 15, 20 minutes long, so I want to get this over with really quickly. So what I did was I went to Google, okay? And I just typed it in. I said SCHD versus DGRO, all right? Here's what the AI overview told me, and I'm going to share it with you all because I found it to be actually very factual and very helpful in deciding which one to go with if you're struggling behind the scenes on whether or not you should sell your shares or not. So let's talk about it really quickly. AI overview says both SCHD, which is the Schwab US Dividend Equity ETF, and DGRO, which is the iShares Core Dividend Growth ETF, are popular ETFs for investors seeking dividend income. However, they have distinct strategies and characteristics that differ from each other. All right, let's start with SCHD. SCHD's focus right here, first line: dividend sustainability and high dividend yield. Their methodology for obtaining that is that they screen for companies with a long history of dividend payments and strong fundamentals. Okay? They screen for companies, once again, with a history of dividend payments and strong fundamentals. It says their holdings are more concentrated, which means that they have a portfolio of about 100 stocks. Okay? That's one of the main key differences between the two. SCHD has a portfolio of about 100 stocks. Those 100 stocks are centrally or are focused on stocks that have a history of paying dividends, sustained dividends over I believe it's a decade or more. I could be wrong, could be longer, but sustained dividends that you can count on, that have a storied past, that you can easily look up and see, hey, this basket of stocks right here has paid out dividends for X amount of years, and it has been excellent. 100 shares versus DGRO, which has 400 shares that they oversee. Now, that's a huge difference. You're talking about a difference of 300 different stocks, okay? 300 different holdings between the two. So that's one of the main key differences right there. The other difference is the first one that I mentioned, which is their focuses, okay? SCHD is focused on that sustainability and high dividend yields. DGRO is focused on dividend growth, meaning that over the course of the next 5 to 10 to 20 years, they are expecting the dividend stocks that they have as a part of their portfolio collective. They're expecting those to receive incredible dividend growth. So while the stocks in there may not be necessarily a higher percentage of stocks as far as dividend payout is concerned, they do expect the stocks that they have in the collection and basket of stocks that they have to grow substantially over the course of the next decade or so. Their methodology prioritizes companies that have a history of growing their dividends, even if the current yield is lower. Their holdings are more diversified with a larger number of holdings, again, around 400 different stocks. Their dividend yield generally has a lower dividend yield compared to SCHD. I believe SCHD right now, we're going to go into it in a second, but I believe it's like 3.2 something percent, while DGRO is 2 point something percent. Okay, but we're going to go into it right now. The diversification. DGRO offers great diversification with more holdings compared to SCHD. Fees. Both funds have low expense ratios, with SCHD being slightly lower. I believe SCHD has an expense ratio of like 0.06 or something like that. Either it's 0.03 or 0.06. Either way, it doesn't matter, because when compared, both of them, they're relatively around the same number. It doesn't really matter. There's not much of a difference between the two as far as the fees go and what it costs to manage these funds, because they're kind of passively managed, right? But in summary, the choice between SCHD and DGRO depends on an investor's individual needs and preferences. For investors prioritizing dividend income, SCHD might be a more suitable choice due to its higher yield. For investors seeking dividend growth and long-term appreciation, DGRO might be a better option with its focus on companies with a history of growing dividends and its higher long-term returns. Boom. That's it right there, y'all. This don't need to be rocket science. A quick Google search will yield you a lot of results, I promise you. And these aren't bad results. Yes, they could delve deeper. Yes, you can delve much deeper, get into each company and the breakdown and the top 10 and holdings and how much this company has of this or how much this company has weighted of this company, and so on and so forth. You can get into all of that if you want to. You can go deeper. But I'm just saying, at the surface level, this is pretty good information for the common investor, right? You don't need to go that deep. This isn't rocket science that we're doing here if you want to determine between the two, right? So let's go into the stocks, and then we're going to get out of here. We'll be done. This is one of the differences right here between the two that they did not mention. It's the cost per share. Obviously, SCHD right here at around sitting at around $27 per share, you're getting a lot more bang for your buck. Your dollar is going further, obviously, right? Because we're talking about we're talking about a $40 difference here, y'all. About a $40 difference between SCHD and DGRO. It's about a $40 difference per share. And when you're talking about the common investor, that's a lot of money per share, y'all. We're talking about the common investor here. We're talking about people that are investing based off of their paycheck. We're talking about people that are investing based off of that biweekly check that you're going to get. $40 is a lot when you're talking about buying shares of a particular stock in order to build out a dividend catalog. So that's one of the things that people are attracted to with SCHD right off the top is that stock price. Now, granted, I believe they just had a split, right? Did they have a split? Somebody will let me know in the comments, I'm sure. Let's look at the history, okay? 5-year charts for SCHD. They're up a little bit over 56%. 5-year charts for DGRO. up over 72%. That's a 20% difference. That's big, right? That's big, which is why a lot of people are saying that they should shed their SCHD shares and buy and pick up more DGRO because they're seeing that growth there over the course of the last 5 years, right? Click on the year chart, 12%. Over 12% for DGRO. Year chart for SCHD, only 4, barely 4%. Again, this is why a lot of people are saying DGRO might be a better choice for them. Year to date, that's where you see that drop off there. Boom. And this is what people are talking about when they make videos on SCHD and talk about how the stock has fallen and everybody should abandon ship. This is what they're talking about. This is what they're looking at right here. Versus DGRO, year to date, still up nearly 6%. But ultimately, you all, this comes down to personal preference. It really does. It really comes down to personal preference. When you click on the dividends, they're both of these pay out quarterly. Okay, so neither one of these are monthly. They both pay out quarterly. And if you slide down DGRO to the dividend charts, you can see here that there is an incline. It's not by much, but there is an incline. You go to SCHD, drop down. It's a little bit more, the incline is a little bit more refined, right? It's a little bit more defined, rather. It's really a thing of personal preference. Do you want the dividend income now and you don't care what the stock appreciation really does over the course of the next 5 to 10 to 20 years? If you're focused on primarily dividend income and you're not really worried about the price of the stock, as long as it's not, falling off of a cliff, obviously, then choose SCHD. Okay. But if you want to scale up with these companies, with your dividend stocks and with these dividend companies paying out dividends, then choose DGRO. It's really simple. The top 10s really aren't that far apart, although I will say, I'll say that even their top 15 to 20 stocks really aren't that far apart. All of these companies here are multi-billion-dollar companies, y'all, with a storied history of paying out great dividends. AbbVie, love AbbVie. Lockheed Martin, I have some AbbVie that I buy monthly in my Cash App portfolio. I love AbbVie. AbbVie was also one of the stocks that I included in one of my recession-proof videos, which is a series that I'm going to get back to. But I love AbbVie. AbbVie, Altria, the Home Depot, Pepsi, Coca-Cola. I mean, they're really not far off as far as their holdings go, y'all. You see the same companies are there: Procter & Gamble, Home Depot, Coca-Cola, Pepsi. So AbbVie right here, number 7. So it really, listen, if you really care that much about it, it all comes down to your personal preference. Do you need the money now, or are you okay with holding on to this stock and growing with it as the dividends grow? Also, are you okay with paying that more expensive stock price for something like DGRO? That's $40 difference we're talking about. That's big. All right. But listen, that's it. Thank you all for watching. I appreciate each and every one of you. Let me know down in the comments which one of these you're going with. Okay. If you are going to sell your shares of SCHD, let me know why. I would like to know why. And stay tuned. I think one of these days, I'm going to go over the last video I did, which was over a month ago, where I was talking about all these influencers getting their shit off and y'all being suckers for it. And I got a lot of hate comments that I think I want to go over. I think I want to call some of y'all out live and direct in the next video. I think I'm going to address y'all directly right from the comment section, I think is what I'll do. Because you motherfuckers got shit twisted. But anyway, thank you for watching. I'll see y'all in the next one. Take care of yourselves. Remember to invest responsibly. Remember to invest diligently, but more importantly, invest responsibly. And I'll see y'all in the next one. Thanks for watching, y'all. Later.